Welcome! This video sets the rules of the series. The series teaches bookkeeping in the Italian tradition. Italy shaped the original method of double entry. Luca Pacioli described it in writing, after merchants and accountants used it in practice. Modern teaching often starts from the accounting equation and pushes memorization of debit and credit rules. This series uses a different order. Accounts come first. Each account has a nature. Nature drives meaning. Meaning drives entries. Control checks follow after entries. Accuracy improves when the learner follows the same sequence used in traditional training. Bookkeeping records economic facts. An economic fact changes wealth, obligations, or results. A conversation, an idea, a plan, none of these belong in the books. Evidence matters. A valid fact leaves evidence. Evidence includes invoices, receipts, contracts, bank statements, payroll slips, credit notes, delivery notes, and formal internal documents. Evidence gives traceability. Traceability supports accountability. Bookkeeping sits inside accounting. Accounting uses bookkeeping outputs and produces financial statements and other reports. Finance uses accounting outputs and supports funding, investing, and cash management choices. Confusion often starts here. This series separates the domains before the first entry appears. Many learners struggle with debit and credit because they seek fixed meanings. Debit does not mean increase. Credit does not mean decrease. Those meanings shift with the account's nature. Italian teaching treats debit and credit as positions. Left and right. Meaning comes from the account type. Assets behave one way, liabilities behave another way, equity behaves another way, costs and revenues behave another way. Learners who start from this logic stop guessing. They stop memorizing tables without context. They post entries with intent. This series uses a strict sequence. First, the learner identifies the economic fact. Second, the learner classifies the accounts involved. Third, the learner chooses the side for each account based on its nature. Fourth, the learner writes the journal entry in words and values. Fifth, the learner posts into T accounts. Sixth, the learner checks balance and sense. Each step has a purpose. Each step reduces errors. Skipping one step increases error rate and increases confusion. Each topic arrives in small pieces. Each piece has one objective. The video names the objective at the start. The explanation follows. One worked example follows. A short recap closes the piece. The next piece starts from the previous output. Progress stays visible. A learner sees the same transaction move from document to journal to ledger to trial balance. This structure matters because bookkeeping is a process, not a set of isolated rules. A simple setup supports learning. A notebook works. One page for each account works. A separate page for journal entries works. A ruler helps. A pencil helps. A calculator helps. A folder for sample documents helps. The aim is physical clarity. The mind tracks logic better when the page shows structure. Computer tools arrive later in the series. Manual work comes first because manual work reveals the mechanism. The series has 3 depth levels. Level 1 explains the mechanics. Level 2 builds operational routine. Level 3 adds interpretation and advanced themes. Level 1 focuses on core definitions and posting logic. Level 2 focuses on repetition across many transactions and error checking. Level 3 extends into closing entries, adjustments, reporting logic, and modern developments such as blockchain and triple entry concepts. Watching only Level 1 gives functional skill. Watching Level 2 builds speed and consistency. Watching Level 3 supports analysis and audit thinking. The series uses clear words and stable symbols. The journal entry always states the economic fact first. The entry always states the accounts next. The entry always states the values last. The T account always shows left and right. The series avoids tricks and slogans. A viewer learns one standard method and repeats it. This is how traditional bookkeeping training worked. Standardization reduces ambiguity. Errors happen in bookkeeping. Professional systems expect errors. Controls exist for this reason. The series teaches controls early. Balance checks happen per entry. Cross-checks happen at the trial balance stage. Sense checks happen with the economic story. If cash falls, the story must explain why. If revenue rises, the story must explain why. These checks prevent silent errors. Silent errors destroy trust in financial information. Why does bookkeeping exist? After that, the series introduces T accounts and the meaning of left and right. After that, the series builds the nature of accounts, then debit and credit rules, then the accounting equation as a control. The sequence stays consistent. The viewer follows the path and builds a full working system from first principles. Pause here. Prepare the notebook. Keep the first pages blank for the chart of accounts and the journal template.